Hi everybody, this is Gary Dean with Sentiment Timing, and this is our free video report for Wednesday, January 17th, 2018. I hope you guys had a great day today, and let's get started. We've seen some pretty volatile markets over the past couple days. I gave you a brief little update on Woody's his stock bond ratio. And if you have not seen that yet, it's something that I strongly recommend. Even if you're just somebody that's trying to manage over your portfolio and not a trader, this one report will do wonders for you because it is a longer term view of things. And with sentiment timing, we will take that overall, say, bigger picture, we'll call it, where we're looking at some type of top in 2018 and a low in 2021. That really does nothing for people that are looking to get in and out of the market, because even though those are what that's what Woody sees, and based off of the stock bond ratio report that I had just mentioned, back in over a year and a half ago, he was looking for a top in 2018, and here we are. It's something that not a lot of people follow, especially on a psychological way that he does. He's one of the only ones that does do it. So it's an important report, and like I said, it's something if you're just looking to manage over a 401k, or or just your regular portfolio, and you're not looking to trade, that report alone will do wonders for you. But getting in and out, because even though that's the forecast for the bigger picture, there's going to be big moves up and down, and that's what makes things exciting for things, because when sentiment's going to get at extreme bearish levels, we know that we get massive bounces, and pretty much we saw one of those today. But when sentiment gets at very bullish levels, especially when the markets are in a declining environment, it follows it really good. And what happens is you get the sharp moves to the downside. So now more than ever, I mean, with the entire newsletter, when the market's just going up and it's boring, and there's no volatility, really nobody needs any kind of newsletter. You just buy whatever and let it go. It's when things start to get volatile where people get accustomed to the no volatility in the market, and they buy the dips just because that's what they've been trained to do, but they don't understand that the market has switched and is now in a downtrend. And what happens is these portfolios that are up 30, 40, 50% end up going down 30, 40, or 50%, because what happens is you're buying the dips, and you don't know, you're not following what the sentiment is telling you, what Woody's technical timing periods are telling you, and also what the regular technicals are telling you. But when you have all those put together, and then you have volatility put into it, now that's where it's, in my eyes, some of the best trading periods that you can come across, especially with the type of information that's provided in the newsletter. So basically, we go off of time. That's Woody's technical timing indicators. This lets us know when to expect a reversal of time period. Why is the sentiment? So Woody's one of the only ones in the world that tracks investor sentiment the way he does. And then the technicals gives us an idea as far as where we are as far as wave structure. Are we seeing bearish divergences, and where to look for a low or a high? And that's where, when I said you have volatility when it's thrown into the market, these three, when you base your trades off of these three instruments, it's one of the best trading environments you could come across. So um, basically, the what we had put in the stock bond ratio. This is, gave you guys a little piece of it, but the big picture suggests that there's going to be an equity high in 2018 and an equity low in 2021. So that is a long time period. And again, this is something that he mentioned in November 29th, 2016. So this is going through all the way 2017, and now we are in the 2018 time period. But But the stock bond ratio, it's based off of psychology rather than the Wall Street rationality. And once rates start to rise and accelerate, they will recognize as a problem in equity valuation, and that is going to be what brings the volatility into this market. And a lot of people are going to be calling this a new bear market, but when I show you what my charts are showing you and it matches up with this, it's not a new bear market. It's going to be a large wave forward down. And when you look at the weekly charts, the daily charts, and even going into the 60-minute charts, they're all saying that same thing. So again, expect volatility in 2018, and it's going to be something that not a lot of people know how to trade because they haven't seen it in years. So everybody thinks they know what's going on, but then when volatility hits, they don't know what sentiment is. They don't know what the technical timing turn dates are, and what happens is they find themselves chasing their tail. But when you have all this information in front of you, what happens is you're able to be proactive. So if you know that there's a top pending and we have sentiment at extremes, what you do is you wait for a technical sell signal, and then from there you either get out of your long positions or you go short. Vice versa, if the market's going down, if there's extreme bearish readings, then and we have a technical turn date, then what happens is you wait for a buy signal, and then you go long and you just repeat this. And like I said, when volatility is in the market, there's huge gains to be made. It's not just one-sided, which is the long side lately, but when that changes, a lot of people will fight that because of the basically they've been trained to just buy dips and they've been right. But when it changes, that's when people really start losing money, and why you really need this information. So this is what we put out in. You had read it in yesterday's report. It's the stocks are going to have a great correction into 2021, and basically what's going to be happening is this should be resolved into a corrective period, like a fourth wave, but another run up. So what I'm going to show you in my charts is this fourth wave down, and it's matching Woody's technical timing indicators, because we know when to expect a low once this top hits. And like I said, the way these markets have been moving, when it does start down and we don't get the reflex bounce and we don't get the we have wave structures that are looking for everything complete, everybody's going to be buying the dip like they've been trained, and when it keeps going down, that's when things are going to get hairy. So this is the sentiment. You can see it's been extreme levels, but we had no technical timing turn date to expect this market to go down, and it just came on the 9th. We did get a good drop on that, but then Friday and Monday, Friday brought things back up, and then we had Monday was up again, but then we had the reversal, and again, that was the 99% sentiment on it. So everybody's bullish on this market, and when you look at a longer term, you can see when it's up here, there is no technical timing turn in this area here until we were in 2018. So we had times when you could expect some kind of quick drops, but now we're in the time period where things can get very, very volatile. And look how this moving average is up at all-time highs as far as the bullish sentiment, and that's something that you really want to pay attention to. So in the report yesterday that I showed you, we knew we had the 99% bullish reading. We knew that we're in a time period that we're expecting a top, and this is going to be a buy to dip episode. So when the low comes in, there's going to be a great rally. But if you notice what I put, this is looking for a minute wave 4 down with a wave 5 up next. And I said, if history is going to be our guide, the bulls should at the least try and test or break the highs we leave behind here. So the highs were left behind. When we put this report out, the S&P was up some 14 points, and it closed down. It went down, I think, as much as 18 points and closed down 10. But that was not the high. And if we take a look at the chart today, that's exactly exactly what happened. We made the low, and in my morning notes, I had said keep an eye on that 2765. That's where the wave 4 hit, and now we're in the wave 5. So if this happens, what's going to happen? We're going to get technical sell signals. We know the wave structure is lining up for it. We know we have a technical timing period that's looking lower, and we have everybody that's bullish on the market. And the reason why this is important is because when this wave 5 ends, it's going to hint that this wave 3 ends. And remember where I said that the next move lower, Woody's saying it's going to be a buying episode, because when it comes down, everybody's going to be shorting the market thinking we're starting a new bear market. And when it comes down, this is only going to be your wave 4 down, and the wave 5 up is going to this wave 4 is probably going to come right into the technical low date that Woody has, and then we're going to get a wave 5 up to new highs, and then everybody's going to get bullish on the market. But again, if you take a look at the weekly chart now, once this wave 4 and 5 ends, if we go and take a look at what's going on in the weekly chart, that is going to complete this wave 5. And remember the low coming in 2021? Well, that's what this wave 4 would be. So there's times that are coming right now that are going to be very, very interesting. Don't think that we aren't going to get volatility because we haven't seen it in a while. It's coming. For tomorrow, I'm kind of anticipating that we are going to break through these highs, but if not, it actually achieved what I was looking for when it was down here, and that was to test these highs. If it breaks it, it makes perfect sense. It's what's expected. If it doesn't and it starts heading down, you really want to start paying attention to when this low date is, because if you start buying too early, then you're going to find yourself trapped, and you're most likely going to be selling right when the next low is coming. And when that next low is coming, it's going to be this wave 4 down, which then is going to give an explosion to a wave 5 up. So hopefully this helps you guys out. Like I said, there's some really, really interesting times coming. If you're just looking to manage your portfolio, or you're looking to manage your 401, definitely take advantage of the special that we have going to, just at the bare minimum, read the stock bond ratio, because that will help you out a lot. But there's going to be some really great trading opportunities in the next 4 to 6 weeks, and then once that ends, then we're going into a heavy volatility area, and you really have to stay one step ahead of the market. So with that, have a great night, and I'll talk to you guys next week.